Hi, thanks so much for joining in. You're watching NDTV Profit. This is Market IQ. My name is Alex Matthew, and with me is Pallavi Nahata. Hey, Pallavi.
Hi.
Well, as we speak to you right now, we have come off the day's highs, but earlier in the session today, we saw an all-time high for the Nifty 50. In fact, we are trading with gains of about 0.4% for the Nifty 50 right now, but we hit a day's high of 21,600, held above that mark for a very short period of time. In fact, you're seeing more of a cool-off in the broader end of the market. Let's pull up the mid-cap 150 chart, and you'll see the intraday chart has moved significantly off the day's high. It is now trading with gains of about 0.2%, or rather 0.1% or thereabouts, and the small cap index still trading in the red, down considerably from the day's high. It is trading with cuts of about 0.1% or thereabouts. Let's talk about a few sectors that you should watch out for, and in fact it is the metal index that is the outperformer today. It is gaining about 0.8% or thereabouts, but you have the PSU banking pack that is doing quite well as well. You have the PSU banks as a whole that are gaining about 1.2%. In fact, that is the entire sectoral picture for you. You have auto that is up about 0.7%, realty about 0.5% higher, and the Nifty Bank that is up about 0.5%. The underperformers are three. You have the media pack, you have energy and oil and gas that are down in the dumps today. Of course, oil has been a bit of a focus with crude oil prices rising. Brent crude is trading above $80 to the barrel because of renewed concerns about the Red Sea region and maritime trade through the Suez Canal, which is resulting in some concerns about the supply of oil. Right now you have NYMEX that is trading at about 75.4, but as I mentioned, you had Brent crude, which is trading very close to that $81 per barrel mark. In terms of a few stocks from the benchmark index, then you have Hindalco as well as Ultratech Cement, which are the top performers on the Nifty 50. And then you have a couple of auto names that are doing well. Bajaj Auto, Tata Motors, Bharti Airtel, all gaining close to 2% or over 2% at this juncture. Among the losers, you have NTPC and Britannia, which are losing over 1% each. And you have Tech Mahindra and Adani Enterprises, which are also losing ground. Now, very quickly pull up the advanced decline ratio, because that will give you a sense of how the market texture has shifted, and it's very close. It's even Stevens at this juncture, but it started off with a wide gulf between the advances and the declines, and now you have more or less equal number of advances and declines. Now, it was a day of a record high for the Nifty 50, so it got us thinking. It's quite possible for the mutual fund industry to have seen its assets under management cross a landmark. And in all probability, you will get a confirmation on this on the 8th or 9th of the new year, that is January. But in all probability, you have assets under management in the mutual fund industry that has crossed 50 lakh crore rupees. It stood at around 49 lakh crore as of the end of November, and that's up about 23% from the start of this year. I'm talking about the calendar year. A bulk of that has been contributed by an uptrend in equities, both in terms of contributions by retail investors and also because of the upside that you've seen in equities as a whole. So the underlying has lifted the assets under management as well. Equity assets under management are up as much as 29% or 28.5% or thereabouts. Just in December, you have the benchmarks that have gained quite considerably. The Nifty 50 is up about 7%, the mid-cap index is up over 5%, and small cap is up about 5%, which is probably the reason why you're seeing the CEOs of a couple of very large mutual funds that are confirming that in all probability, Pallavi, we have crossed that 50 lakh crore mark for the mutual fund industry, and quite a landmark it is.
Absolutely. Now, moving on, an update from the SBI, the country's largest lender, today raised its deposit rates across tenures. The said rate hikes will be effective from today itself. We have our colleague Mimamsa Verma joining us with more information.
Hi, Pallavi. So the State Bank of India has raised its deposit rates by up to 50 basis points today for deposits under 1-year tenure and those that are above 3-year tenure. So for general public, the revised rates range from 3.50 to 6.50%, and for senior citizens, these new rates will be in the range of 4 to 7.50%. So now why SBI has done this is to attract depositors as banks across as the board are struggling with tightness in the liquidity in the banking system. So as on December 26th, the liquidity in the banking system has been squeezed to rupees 2.6 lakh crore, which is the level last seen in 2016. So due to this, many banks and companies are now tapping short-term funds to short-term debt market to raise funds. Now the impact of tightening liquidity is also evident from the short-term money market rates. If you see the call money, the interbank call money rate, it stands at 6.75% today. So the tightness in the liquidity in the financial system is quite overpowering now, and the banks are resorting to measures like raising term deposit rates to attract depositors.
Well, tightening liquidity, as Mimamsa pointed out, that's going to be something we'll continue monitoring over the next few days. Moving on, Zentek is a contender for stock of the day. It hit upper circuit today on positive management commentary while speaking to NDTV Profit. Ashok Atluri, the chairman and MD, says that the company expects to double top line in FY25. Listen in.
We had projected that we would hit a target of about 450 crores of turnover this year, and in the first half we have done approximately 200. And as of now, we continue to stick to our target of 450 crores, and that seems achievable at this point in time. We have about 1,200 plus crores of equipment orders. The total order book position is about 1,529 crores, but out of that, the order book is less than 1,300 crores. So all this order book has to be executed in the by the next financial year end. So that would mean that if we take out about more than 250 crores of this year, next year we should cross 900 crores. So we should be almost doubling our turnover from the current financial year's turnover. So that is the outlook for the next year. I think if we do something like 4,000 to 5,000 crores by FY28, I would be kind of disappointed. That would be a lower end of the target, yeah.
Okay, and clearly the stock is off that high point of the day. But why is this significant? Just very quickly to give you a little context, for FY24, that is the current financial year, the company is talking about a top line of about 450 crore rupees. And what he is saying, what the management is saying, is that in FY28, he would be disappointed if they hit 4,500 or 5,000 crore, which is 10x what it is currently. So he's quite sanguine and quite positive and optimistic about the growth for the company going forward. And that is reflected, of course, in the share price. Now, moving on to another big story that we've been tracking, and there has been a gas leak from a pipeline that belongs to Coromandel International. This happened overnight, and we've been tracking this story all of this morning. Apparently, that has been contained, but to give you the latest details, we're joined by Sandhya, who has been tracking this very closely. Sandhya, what are you picking up? What's the latest?
Well, the latest is that the Coromandel International unit, the company itself, has written to the Tamil Nadu government, to the Tamil Nadu Maritime Board to be precise, stating that it is suspending all operations at the Ennore port until the leak is rectified to the satisfaction of the government authorities. Remember, we had informed our viewers earlier today that the Tamil Nadu Environment and Climate Change Minister, Shiva Mayyanathan, had said that the unit would be closed until further orders. Of course, Alex, thank goodness for the scene nearby, because it was the winds that managed to get rid of the ammonia gas quite quickly. And of course, by then, a number of residents had already complained of breathlessness, and at least 10 of them had been taken to the Stanley Hospital in North Chennai. This is, if you remember, the second such environmental mishap that is taking place in this area. This is just to the north of the coastal city of Chennai. Remember, a few weeks ago, just after the floods, there was an oil spill in an area called Manali, which, and this spill, of course, is yet to be completely cleaned up. So this is the second environmental mishap that has taken place. The ammonia gas, like you said, was detected around 11:35 last night, and the leak was actually in a pipeline that runs under the sea from the Ennore port to the unit of Coromandel International. And this pipeline carries ammonia, which is imported from Iran and Saudi Arabia through the Ennore port by the company. Now, Now, the Tamil Nadu Pollution Control Board has also tested seawater and air samples in the area, and they found high concentrations of ammonia in the area. Of course, the residents are all back after the late night scare, but we are going to be tracking the story and monitoring the situation, Alex.
Thanks a lot for that, Sandhya. We'll continue to track that situation as the situation appears to gradually normalize, things coming back to normal there. Meanwhile, the shares of Coromandel International are down in trade. So we're slipping into a short break now. Stay tuned. We'll be right back.
Welcome back. You're watching Market IQ. Now, after enduring a slow growth in 2023, the FMCG sector is looking at 2024 with high hopes. Potential tailwinds in the economy, including volume-led recovery growth, could be a potential boon for the sector. Our colleague Sesha is joining in to tell you more about what is in store for the new year. Sesha, thanks so much for joining in. What can you tell us about 2024?
Thanks for that. So first, I would likely to speak about 2023. So, a combination of factors such as increased aggression of small players, post the decline in raw material prices, a weak rural demand, unseasonal rains, and alternative avenues of spending have led to softer growth for the sector. Now, Q1 and Q2, we have seen muted revenue growth as pricing corrections have taken in several categories with inflation cooling, and also volume growth have been sub 5% for most companies. However, on the positive side, we have seen gross margins have made a smart recovery, but competition picked up too much, which warranted a rise in the advertising and promotion spends. Now, looking forward to 2024, which also happens to be an election year, CEOs as well as the analysts tracking the sector that we have spoken to said that the recovery in consumer demand led by rural election-led stimulus programs, better than expected recovery in margin, and return of promotional schemes are likely to be the key catalysts for growth in 2024. Moreover, as you already mentioned, 2024 could turn out to be an year of consolidation. We have seen mergers and acquisitions largely taking a backseat this year amid valuation mismatches, for example, Bisleri as well as Capital Foods. However, next year it's likely to be the other way around. Companies are also expected to increase the pace of premiumization while benefiting from a stronger urban market. They will also be adopting strategies, be it in the D2C space, expanding in quick commerce, or even product launches to resonate with the Gen Z consumers. So a lot to track in the space.
Thanks a lot for that, Sesha. Now, there's been a lot of action in the primary markets in the past couple of months, and that continues today as well. We've had 3 companies that have made their stock market debut. Those are RBZ Jewellers, Happy Forgings, and Credo Brands Marketing. Moving to RBZ Jewellers first, it was logged in the upper circuit after it listed flat on both the NSE as well as the BSE at its IPO price of 100 rupees a piece today. The stocks gained 4.99% on BSE at 104 rupees, and it was trading 5% higher on the NSE as well at about 105 rupees.
Yeah, absolutely. And in fact, we've got Happy Forgings as well that is up quite considerably. In fact, let's pull up that it's 24% higher as things stand, and Credo Brands doing quite well for itself as well in the primary markets, up over 10%, and that just goes to show the kind of retail interest there is in all of these newly listed stocks. The question is, how far will that continue, and will that continue into 2024 as well? Now, just a quick update: if you want to read more about these companies and in fact learn about what the management had to say, I'd like you to take a look at ndtvprofit.com. We've done interviews with all of these managements, both in the run-up to the listing as well as on the listing day. So do check that out. We're completely out of time, I believe, on this edition of Market IQ. Thanks so much for tuning in. And in fact, we've got a lot of action lined up for you, starting with large trades up next at 1:30. Do stay tuned. This is NDTV Profit.
Thanks for tuning into the Mutual Fund Show. I'm Neeraj Shah. Over the next 25 minutes, we are going to do something which is not normally what we do at the end of the year, which is try and talk about the schemes which have done well. But let's try and talk about underperformers and what is it that schemes which have not been able to do well in the last 12 months, is there a chance that there could be upsides there? Are those themes per se suited for investing in as a category? For example, large caps. Are large caps good to bet on? And if so, what is it that and where is it within that you bet on and why? I think we'll talk about all of this over the next 20-25 minutes. But I start off with the disclaimer that if you're investing in the mutual fund space, do not invest with a 1-year time horizon. Do not look at the last 1 year and try and take an investment decision about whether a particular fund or a category is good or bad. I think these should be viewed over a longer period of time. With that, I'll still do what we shouldn't do, which is talk about the year with both of our guests. Prableen and Rushabh join in. Both of you, thank you so much for taking the time out. We keep on saying that this is not how funds or stocks should be looked at, but we still talk about that a little bit simply because the audience still takes some of the decisions based on those. So let's try and make the most try and give them the best advice, and which is why I've invited both of you on the show. Thank you for taking the time out. And probably I'll start with you. Large caps as a category, underperforming for a while. Enough portfolio managers tell us that now is the time to bet on large caps. Trying to understand if you, from a mutual fund perspective, also believe the same.
Thanks, Neeraj, for inviting. Great to be here. Yeah, absolutely. Large caps, I think the SPIVA report over the years has given us, enough data that actively managed large cap funds have been personally underperforming the benchmark index, and the underperformance is as high